I'm Randy Schwartz. Yes, there are three huge, horrible sometimes challenges you have to deal with as an agency owner. And when you can solve them, everything gets better, better, better. A mentor that I know one time said, he said, if you have a problem and money will solve that problem and you have the money, then you've solved the problem. You've got that ability. So money solves a lot of problems. So what are a lot of the problems that insurance agency owners have? Well, really, it gets all back to money. When producers produce more, when new producers come in, when you've got the systems in place, life is good. But when you don't have the systems in place, your existing producers are producing, your new producers aren't happening, and all this sort of stuff, then the problem is not enough money to pay all the overhead, to pay the support staff, to do all that sort of stuff, to be able to make happen what you want to make happen in your agency, which is grow it, and which is drive more profit to the bottom line. So that leads to this question. What are the three biggest challenges that you might have as an agency owner? Well, I think that number one is this, and it's almost universal. How do you get the bottom 80% of your producers involved in the game of selling? Because if you could, they would drive more money. It would be an outstanding sales culture. Your profits would be going up. Your top line would go up. The value would go up. Everything is awesome. But too many times they don't. And that's what we want to talk about. Number two, what's the second biggest challenge? Is how do you recruit and hire and onboard and have them be successful rapidly, new producers? Another way of saying it, how do you recruit, hire, and develop $1 million producers? Because if you had more big-time new producers taking over, how much better would your life be? And when it gets down to it, what else is more important than the quality of your life, the quality of your producer's life, the quality of your staff life? And therefore, that is what enables you to serve all your customers, which then causes them to keep paying you money. When those people, your top producers, your new producers, your support staff, all do their job, your life is good. So that's what we really want to talk about. And then what's number three? Big challenge, big challenge. Generally, is it true or not true that you've got three big priorities? Priority number one is most of your money comes out of you growing your book of business. And you've got to retain it, grow it, and that's where the majority of your money comes from. Secondarily, a lot of your money comes from the agency. And so then your second biggest priority is managing the agency. And then third on that list really becomes your producers. Now, it'd be great to say that producers are well taken care of, they're thought about a lot, they're driven, all that sort of stuff, and some agencies they are. The question is, are they in your agency? And see, when the systems don't exist for you, when the processes aren't in place, it's hard to drive your producers. It's almost like doing a custom home every time you want to build something instead of able to do tract homes. And think about the biggest builders in the world are tract home builders. They might be Mac mansions, but they are tract home builders. So let's get into those three things. How do you motivate the bottom 80% of producers? And let's just think about, before getting into that subject, what's the implication if you can't do that? And the other part of that's, what is it that's holding them back? If we could define and decide and understand those things, it would change a lot about what your future is going to look like. So let's dig into it. Top 20, middle 60, bottom 20. Top 20 of your producers, you're probably one of them. Go sell, go sell, go sell, go sell. They love selling, you love selling, they outsell, and they're always going to hit their numbers because that's just what they do. So those guys, we love on them a lot. You love on them, you recognize them, they make a lot of money, life is good. Flip to the very bottom. Bottom 20% of producers probably should be shot. And why should they be shot? Well, they shouldn't be shot as human beings. They only should be shot as producers. Why? Because they don't produce. And many times they aren't even producers. They're account managers at best. And some of them do a phenomenal job at that. Many of them, I'll let you be the judge. But if you want to grow your agency, they're not producers. So deal with them however you want to. The gold is the middle 60 producers. That middle 60%, top 20 does good, bottom 20 does bad, middle 60% are the high potential, but they're not doing it near to the degree they're capable of. And the key word there is that they're capable of. And why are they not doing it to the degree that they're capable of? And the number one reason is because they never intended to. What do you mean they never intended to? Well, let me tell you what I mean that they never intended to. If they intended to, they probably would. Well, then what do they intend to do? Well, they intend to make a living. They intend to write enough money, enough business to make enough money to be able to take care of their families and get by on a month-to-month basis, maybe even save a little bit of money, but not a lot. And how do you know? Look, just go do this. Just go do this with all of them. Sit down with them kind of one by one and say to them, and maybe you're going to say, well, Randy, I don't even do that. And okay, well, if you don't do it, you don't do it either. Sit down with them and say, let me see kind of your notes where you kind of scribble and diddle-daddly and write notes on papers about who you are and what you want to be and the kind of money you want to make and what you want for your life and all that sort of stuff. Where's that kind of doodling? Where's that book you have? And they're not going to have one. And they won't have any big future that they're trying to define. And they won't have pictures of the boat and the car and ring and all that sort of stuff. And they won't have pictures of the kids and the college they're going to. They have pictures of the kids playing ball. They have kids of their pictures at school. They have kids of their pictures when they make little Christmas ornaments and stuff like that. They've got all those pictures. But in terms of the pictures of the future, they don't have. All right, so you say big deal, Randy. Well, big deal. Because that's how you're fueling your future. That's what's making you think about what you want in life. So my whole point to you is they're not bigger than what they are because they never intended to be. So then I'm going to open up that door for you here in a moment for you to think about how you could help them have bigger visions about what they want to do. So the middle 60% of your producers is where the gold is. And it's that group of people that when you can get them into the game, it changes your game a lot. And it changes it because then we move down to number 2. And see, all these things are interrelated. It'd be great to say they're not, but they're totally all interrelated. Number 1, getting that middle 60% of producers involved in the game. Number 2, how do you find, hire, and develop $1 million producers? Well, if you don't have the skill to get that middle 60% of the game, how are you going to bring new producers into your agency and get them big time into the game? It's more of a game of luck rather than a game of skill. And see, I want you to think about this phrase. The difference between where your agency is today and where it will be 5 years from now is direct proportion to your ability to develop your sales team. And so now the key word there is in direct proportion to your ability to develop your sales team. Because if you don't develop your ability to develop your sales team, who's going to develop them? Nobody. And that's why many of them are not playing to the degree that they could. Think about this. If you have children, you know this story. Have you ever watched them play and hollered at them? Yeah, everybody does. Every dad, every mom does. Why do they holler at their kids? Because they see their kids be able to play at this level. They see them playing at this level. That's the performance gap right there. And they go, come on, Johnny, go get it, man. That's why. And see, if you did that, if you saw that in your kids, then you probably also see it in your producers. They're playing at this level. They could be playing at that level. That's the performance gap. Who's going to close that gap? You can't leave it up to them to get it done. You can't. Your ability is going to change this whole picture. And so this message is really not about your producer. This message is about you and your capability. I'll say that phrase again. The difference between where your agency is today and where it will be 5 years from now is a direct proportion. It's in direct proportion to your ability to develop that sales team. And then that starts to solve all your problems. It gets your middle 60% involved. They grow faster. Get new producers involved. They grow faster. Everybody's growing faster, throwing off more money. Agency profit going up. Agency net worth going up. Your life is good. It's all good. But that opens the door to problem number 3. And what's that? Well, number 3 is pretty simple. All you got to do is just kind of look around. And you ask yourself the question, what kind of systems do I have in place to really develop that middle 60% of producers? I mean, develop those guys, not just go, here's a book, good luck, go do something. Hey, you ought to go for that training deal. But I mean, to develop those guys just like a head coach would. What do you have in place? And because you might not have that in place, it's incredibly difficult. It's hard for you to find the time to go develop the curriculums, to develop all the systems, to teach them, tell them, help them do all the things they need to do. So then as a result, because you don't have the time, it does not get done. And when it doesn't get done, they don't get developed. You don't hire new producers, put them in that system, and just blow out the numbers. This is the way life is. It's not a big deal. It's just the way life is. The only thing that makes it a big deal is when you start to look at the financial strength of your firm and the financial strength you'd like your firm to be. And when you put that in perspective, now is when it makes a big deal. So what I'm hoping you believe you'll benefit from is having a system to be able to take care of those three problems. Number one, how do you motivate the bottom 80% of producers to produce? Really, how do you motivate the big middle 60%? That's where your goal is. Number two, how do you find, hire, and develop $1 million producers? Number three, how do you build systems to make it to where it's doable for you? So that's what I want to get into. And in doing so, I'm just going to lay it out. I call it the 5 core elements of extraordinary growth. Here it is right here. And really, this is at the heart of everything that most agency owners want to do in their agency. Was just on the phone just a few moments ago with an agency principal. And he was telling me, he said, we just wrote a $250,000 revenue account and a $100,000 revenue account. It's a good week. $350,000 worth of revenue just off of that, not counting the other things that all the other producers are doing. And what he said was, Randy, this is when you made my life easy. Used to, when we'd hire a new producer, there was no onboarding system. They always come ask me, hey, what am I supposed to do? When you installed that system at our place, now they know what to do. And so what I want to do is show you that system, break it down for you, give it to you the steps, let it be. So let's get going. So how do you do what we're talking about? Number one, I believe there are 5 core elements of extraordinary growth. And for you, the goal here is to break that down so you can see it, understand it, feel it, and figure out how you can implement that. So when you sit there and think about the goal of growth, what's the first thing you have to do? What's big step number one? Well, step number one is to commit to growth. And I know that sounds like first grade stuff. Well, Randy, yeah, of course. I mean, we're committed people. Fine. Well, interesting enough, when you look at the agencies throughout North America, and you think about why more of them are not growing at a bigger, faster, bad boy pace, the answer becomes kind of simple. They're not committed to growth. Because if they were committed, they would have kept pushing through those walls. But they didn't commit, and so they didn't push through the walls. When they hit the wall, they quit. And you look at our industry, I saw stats the other day. The average age, they call it the WAPA, weighted average producer age, has gone up 2 years in the last 5 years. It is now it was 46.3 and now it's like 48.4. It's gone up 2 years. The average age of shareholders has gone up 2 years in the last 5 years. Bad trend. Instead of going up, it should stay flat. Because as people are getting older, younger people are coming in, it's all averaging out. It's getting old. So it's a huge, huge problem. Hiring, developing new producers. And I think what happened to a lot of people is 08, 09, people got stuck in the rut. The economy went to hell. Everybody suffered from it for the most part. Some people backed up when other people pushed forward. Those people who pushed forward hired new producers, drove their existing producers, have grown through it. And there's a lot of agencies today that are growing at 9, 10, 11, 12, 13, 14% compounded growth rate year over year over year. It makes people rich when they do that. And yet there's a lot of people, also a lot of agencies, they're growing at the 1, 2, 3, 4% rate. And so how do you bust through that deal? Well, big number one is you got to commit to growth. Now, as you commit to growth, there's kind of an A and a B to that. A is you got to commit to being a proactive services firm. What is meant by that? Well, when you look at our business and break it down in 3 big components, here they are: price, coverage, and service. And the big question, the universal question is this: is price for you a sustainable competitive advantage? And of course, most people go, no, it is not. That whatever price we can get, somebody else can come in and match it, because everybody represents the same carriers by and large, unless you're in a very special, unique niche. Then we go, is coverage for you a sustainable competitive advantage? And most people go, no, it is not. That whatever coverage we can get, somebody else can come in and get it. And every once in a while, people push back on me on this. And I go, all right, I'm okay with that. Let me just ask this question. And you need to ask yourself this question. When you look at 100% of your revenue, how much of that revenue is because of unique coverage? Most of it's not. Most of it is like the same coverage everybody else has access to. Then we go to number 3, service. When most people say they have good service, what they're really describing is their ability to react In other words, if somebody needs a cert, you'll get it out. If somebody has a claim, you'll help get it reported. If they need hire somebody new, you can get them enrolled. It's just something's going on, you're there for them. The problem is that the standards for reactive service are so high, it's hard to trump the competition in the area of reactive service. And the only ones you can trump in the area of reactive service are the Walking Dead. Maybe there's a lot more of those than what we know. But the whole point is, reactive service works when the incumbent is terrible. Your problem is that there's not that many terrible incumbents unless you've got a strategy to take advantage of it. The other side of service is called proactive service. And of course, everybody feels they are proactive. There was a time I felt like I was a college basketball player. I felt like I was, would, could be, should be, and all that stuff. And then I went and competed with some guys that were college basketball players, and they thumped me. And all of a sudden, my feelings got real. They got raw. I became honest about what I was doing. So now a lot of people feel they are proactive, but when you have them define what they do proactive, they can't come up with anything. And here's the quick test, real quick test. If you believe that your agency's proactive, here's all you got to do. Get with a couple of your customer support people, get a couple of your producers, get out a list of their top 20% accounts, and say to that group of people, show me your written service plan for these top 20% of your accounts. And if they can't show you that written service timeline, you're not a proactive services firm. You're a firm that feels you do proactive. But here's what I want you to think about. When you can define your proactive services, then it's the proactive services that you do that the incumbent agent doesn't do. That's where the prospect is being underserved but doesn't know it. So when you've got these proactive services right here, incredibly well defined, it is easier to drive a wedge and win the business. When you don't have these proactive services well defined, you have to rely on the prospect to tell you where they hurt. And here's the problem for most salespeople. For most salespeople, when they have to rely on the prospect to tell you where they hurt, because the prospect doesn't know where they hurt. And how do you know? How do you know they don't know where they hurt? Well, all you got to do is talk to your producers, and I'm talking about certainly that middle 60%, and ask them, how many sales calls have you been on in the last 12, 24, 36 months? And out of all those sales calls, if it wasn't just a lay-down referral, how many did you go on that you asked the buyer how's it going and they go fine? Any problems with service and they go no? Any problems with claims, how they've been handled, they go no? Any problems with coverage and what's going on there, and they go no? And the only problem that the client, your prospect, was aware of was that maybe they felt like they were paying too much and they wanted a better price. So when you are a proactive services firm, what it does is it gives your producers something concrete to sell. When you're not a proactive services firm, they're out there lobbing water balloons. And when it's just like you, if I hit you with a water balloon, you'd get wet, maybe get a little annoyed, but it's not going to hurt you. I hit you with a brick, you're going down. I hit you with 10 bricks, you're going down hard. And so number one is really becoming a proactive services firm is king. It's killer. It's everything. What's number two? Well, here's the deal. It's called the $1 Million Producer Concept, and it's really about helping every producer you have to double their personal income, do it in about 3 years, and do it with about half as many accounts. So let's just break that down a little bit. Now here's a question I got for you. And it's just a way for you to test your producers on these things. And so here's what I highly recommend you do. Take that middle 60% of producers and just one by one, do it very casually, don't make a big deal about it. But let's suppose that one guy's name's Bobby. Hey Bobby, how's it going, man? All real good. Hey Bobby, can I ask you a question? Is there a day sometime in your future when you're going to want to hang it up and retire and never have to worry about money again? Well, yeah, sure, absolutely. Awesome. Well, Bobby, let me ask you this then. When you decide to hang it up, how much money do you need in a big old pot so you don't have to worry about money again? Tell me about it, Bobby. Now, here's what's going to happen. When you ask Bobby that question, Bobby's going to go, well, a lot. Okay, well, Bobby, how much is a lot? And do you know exactly? Are you really certain? I'm just telling you, Bobby's not going to know. If Bobby's one of your typical average 60%, middle 60% producer, Bobby won't know. Now, Now, if Bobby is a financial planner that became a broker not too long ago, maybe he would know, but most of them don't know. So keep doing the reverse engineering here. So how much you have to retire? Don't know. Well, how much do you have to save every year between now and then to have that pot? Don't know. Well, how big does your book of business have to be to throw off that money, to save that much money every year so you can retire? Don't know. How much new business do you have to write to build that book of business to throw off that money to save that pot? Don't know. Now, here's the point I want you to get. Most producers are not connected with their new business commission goal and what it does for them personally, them and their family. There's this disconnection. They don't touch. Look at this. They don't touch. And what do you have to do? You've got to get those things tight like this, that you can't even separate them. And it's got to be a part of your culture, and it's all around helping producers get really clear on that and then double their personal income so that they can throw off the additional income, so they can save the money, so they can build that pot of money, so they can be financially independent. And when you do that, your agency becomes the best place to work in town, because you're producer-centric, you're about helping your producers do that. And then also what happens, when they get clear on that need to double that personal income, and you help them build a plan to do it. Now, if you just said to them, hey, I heard this tape, and I think you guys ought to go double your personal income, they won't trust you. But if you help them through that process, teach them how to do it, teach them to be financially astute, teach them how to write new business so that now it happens, now you got yourself a game going on. So what's the whole concept here? Help every producer double their personal income, do it in about 3 years, 3 to 4 years, just a nice time frame, and do it half as many accounts rather than twice as many accounts. Well, why that? Well, you know as well as I know, one of the biggest problems for producers is time. And once they built up a book of business, now they got all these renewals they have to do, and then they went from being a producer to an account manager. And many times they just write enough new business to make up what they lost, and they put a little sugar on top, but it's not near enough to do what they need to do to really have good compounded growth. And so then it's holding them back, it's holding your agency back, and it's affecting them and their family. So when we talk about double your personal income, do it in about 3 or 4 years, and do it with half as many accounts so that it can freeze them up so they can go sell. That's what they need to do. They are professional salespeople. You're a professional sales organization, and that's what you want to foster if you want a high growth, high money, high profit, high value kind of place. All right, not going to get more into that right now, but more coming up. Then after you've committed to growth, part 1 and part 2, let's just go back. I'm a proactive services firm, and we're all about helping producers double their personal income. That's what we're committing to. And see, when you commit to that, it changes everything about your firm, what you're about, and who you're trying to help. Next, you sit there and go, well, if we do that, then how are we going to do it? Well, you got to have a playbook. Look, name all your favorite coaches, and I can just name mine. Tom Landry was a coach of mine. I love Tom Landry. Jimmy Johnson was a great coach. He won a couple of Super Bowls. Bill Walsh wrote one of the greatest books, The Score Takes Care of Itself. And what does that mean? What he said is, when you will, and you ought to read the book, when you practice, when you have a playbook and you run your plays and you get really good at running your plays and you just do that over and over and over again, the score takes care of itself. When you get good at running the plays, the score takes care of itself. So then he had a great playbook. He'd write out the plays, he'd go out and practice, and he made people practice perfectly because he knew if they practiced perfectly, they could execute perfectly on game day. So step number 2 here is you need a business process, a playbook. So what's your business process? What's your playbook? It's easy to go tell producers, man, you ought to go produce more. Well, of course, it's easy to say. But now what are they going to do to produce more? What's that playbook? What works? So I'm going to show you something that works. It's proven to work. And what is used is this whole analogy. You can kind of see it right back here in the back screen. It looks like a flight plan. And why does it look like a flight plan? Well, I'll tell you why. Having worked with now 20,000 hours with insurance agents, trained about 7,000 or 8,000 producers, having run a little over 2,500 sales meetings, come to a few conclusions. And here's one of them. That selling is like flying. And when you're coming in for landing and you're about to put your wheels on the runway, here's what screws everything up. Is that bad boy incumbent is hanging out at the airport, hiding behind the hedgerow. They got their binoculars, they got their bazooka, They're watching your plane come in and go, oh crap, if you land safely, there goes my big check. And so just moments before your wheels touch the runway and you get the check, that bad boy comes, it fires off around, blows you out of the sky. We call that getting rolled. And how do they do that? Well, you know how they do it, because you do it to people. You know, in your own nice, polite, professional way, you go driving over to your client's office, their prospect, and figuratively, you bring it in the wine and cheese basket. You say, here, you pop the top on the wine, you'll slice the cheese. You kind of hop up in your lap and say, please don't do this. Haven't we been friends? Look, man, I don't know what those people are telling you, but if it's price, we can match it. Coverage, we'll get it. Service, we can provide it. And don't you remember about 4 years ago, you had that tough claim, I fought to help get that thing paid for you. Come on, man, what do you say? And somehow, under all that pressure, along with the relationship and loyalty and all the things that go on with human dynamics, you end up keeping the business. So that is like big problem number one, and that's why the flight plan kind of works. What's problem number two is when you hop in your plane and you go running down the runway, your ability to lift off right here and gain altitude is in direct proportion to your differentiation. The more differentiation, the higher you fly. The less differentiation, the more you're flying right here. This is a dangerous place to fly. So number two is a lack of differentiation. Problem number two. And that's why a little while ago it was said, commit to being a product services firm. That's where your producers get almost all their differentiation. It's not from reactive, it's not from price, and it's not from coverage. So now, using the whole flight plan, now we got ourselves a metaphor for our business process. So let's just do it real fast. What's step number one? Overserve the top 20% of your accounts. Just like I said, get them in here and go, show me the written plan for how you're going to take care of your best accounts. Well, you need to get that in place. Then you've earned the right to then go leverage that relationship to get introduced into who those people know. Think about this. Think about this sincerely. When you take your producers, and they've each got the top 20% of accounts. So if they got 80 accounts or 100 accounts, top 20% would be those top 16 to 20 accounts based upon those two things. So let's just take the guy that's got 100 accounts, top 20% of it is 20 accounts, and just spread out 20 accounts and go to number one and go, who are three people that account knows that this producer like to meet? And then the next, and then the next, and the next. You came up with 60 top prospects that you've got 20 relationships that could get you in. But producers aren't doing that, following through, making it happen, and I'm going to give you a solution to that in just a moment. That's number two step on your process. What's number three step? Is then do the red hot introduction or the bump theory where they're meeting people wherever, or making cold calls. Somehow they set an appointment. Then the next step is pre-call plan, pre-call strategy. Here's what is believed by a lot of people out there, that somebody's got to lose for you to win. The incumbent has to lose for you to win. If you can't get the incumbent fired, you can't get hired. It's just how the law really works. And so pre-call strategy is to make your producer define and defend how they're better than the incumbent. And when you do that over and over again, now you're helping them get good at winning. So that's number two. Then you go on the sales call and build a rapport. And then you go use your differentiation. That's called the wedge in our vernacular, to wedge out the incumbent, to get the pain on the table, get it confirmed, get the solution on the table, get it confirmed, get the commitment on the table, get it confirmed. That's what the wedge is all about. So that's the wedge process, how that gets handled. Then you go from there and you move on to the next piece of it, is then you should have, your producer should have right there, a very highly qualified prospect where once again, they know the pain, got it confirmed, they know the solution, got it confirmed, they got a commitment, got it confirmed. I'm going, man, that's a high quality prospect. That's one that's worth working on. That's one that's worth you spending your $2,100 to helping them market that account, put it on the books of business. But if it's not, they haven't found the pain, if they haven't defined the solution, if they don't have a commitment that person can make a change, why would you want to spend the $2,100? That's the average based upon some research that was done where I had 25 CEOs from regional brokers, average account size, $100,000 premium. Let's fill out this sheet together and average it all up. What does it cost to quote on a piece of business? $2,100 was their answer, wasn't mine. So every time you commit to working an account for a producer, you're investing some money. That's all I know. So now let's make sure it's highly qualified, and then you can go market that account if you need to, or shortcut that dude, and come right over for the BOR. And as you're working the BOR, now there's another process called Keystone. That's what it's called here. It's like, have you ever been to Italy and they've got all those arches, and the last brick that goes in there kind of locks everything in? That's Keystone. That's why this is called Keystone. Everything that could go wrong, think about this, everything that could go wrong when your producer's coming in for the landing, everything that could go wrong has already happened. It's not like new stuff. It's already happened to a lot of people. And what really got me thinking about this is I was at a baseball game with my daughters. They were out there playing softball, standing next to this guy at one of the games, leaning up against the cyclone fence. And he said, he kind of go, what do you got planned this summer? I go, not much. What about you? And he goes, I'm going down to Arlington for some training. That's where American Airlines is headquartered. I said, pilot training? He goes, yeah. I said, well, don't you already know how to fly? He goes, of course I do. Well, then what are you going down for training? And here's what he said, and it was really impactful. He said, we don't go down to learn how to fly. We go down to learn how to deal with things that could go wrong. They put us in those black boxes and they throw all sorts of stuff at us because it's already all happened. Wind shear, electronics out, hydraulics out, ice on the wings, snow on the runway, terrorism, all that stuff. It's already happened. Now what happens, they throw it at them in that black box, teach them how to deal with it. So that's what happens right here. Everything that could go wrong for your producers already happened. Teach them how to deal with that. So that's part of the business plan. Then what happens? Then you come down and then you sell it, and then you wedge-proof it by putting your written service timeline in place, and then you cross-sell and get your partner in. Look, there's another place that for a lot of agencies, millions of dollars are sitting right there in the cross-selling that, yes, you've already picked up millions of dollars, but there's another millions of dollars. There's many more millions of dollars where the P&C and the employee benefits aren't cooperating at the level that you need them to. It would drive a ton of revenue. So that's a business process. Well, after you got the business process, then what you need? Well, man, it's great to have a playbook. It is great to have a playbook. You need a playbook. But if you got the playbook and they don't have the skills to pull off the plays, what have you got? Well, all you got to do is ask Tony Romo and Des Bryant. Des Bryant was a beast of a wide receiver. Incredibly athletic guy. First couple of years in the league, man, he thought his athleticism would take over for everything, but it didn't. Because, they would hike the ball to Tony take a 7-step drop, Tony sit there and come this way, throw the ball. Des is supposed to run down and he's supposed to go to where the ball is going to be. But because Des was either didn't know the playbook well enough or he broke off on the route, then all of a sudden that ball's hanging out there and the defender comes up, intercepts it, boom, goes the other way, touchdown. So the point is, if you don't train and give people the skills to be able to do it, and so the real purpose of training is to be able to create skills, and then from those skills, you create a lot of, and this is a critical word, confidence. Confidence is like a self-fulfilling prophecy. If you believe you can, you probably will. If you believe you can't, you're already screwed. You're already hosed. Confidence is what drives that belief, and this is why it's insane for you to have this huge asset called this $300,000 producer and the $600,000 producer and a $750,000 producer, huge asset that you have that generates off of a $750,000 book of business. Just the value of that is somewhere in the way the value of $1 million, $1.25 million. So if you had a car that was worth $1.25 million, wouldn't you invest in it? Well, of course you would. Well, why would you not want to invest in your $300,000, your $600,000, $750,000 producer? It just makes sense to make sure that investment is well maintained, building its belief, building its confidence, building its skills, making it better and better and better. And yes, I know they're going to push back and go, well, I've already got that down. Awesome. Show it to me. Show me how you got it down. And here's what I love about the way technology has changed. With my little old cell phone, I get my little old cell phone out and I clicked on the picture and said, let's just go. Let's go. I'll play prospect and let's just role play and I'll just videotape you. And I'm telling you what, most of them will fade like a rose because they don't have it down. They just put back on you, just like your kids push back on you. Come on, Daddy, why are you always making me do that? Come on, Mommy, why are you always making me do that? And see, with them, you were strong and bold and you led them. Many times producers don't get led. So training builds skills. Skills derives confidence. And you want that belief that they can do it, that they can win that business, they can get that red hot introduction, that they can build a huge big book of business, that they can double their personal income. You want that. And that's what training does. Then after you train them, what's the next step? You've got to convert those skills into behaviors or actions. I've got 4 daughters. And I'm going to tell you something. We train them to make up their bed, to be polite, to help with the kitchen, to do their homework. And what I know is that if my wife and I didn't drive them to do that, a lot of that would not get done. Same is true with your producers. That once you've invested that time and money in their skills, you can't stop. You still got to keep driving behaviors and actions. It's just the way it is. That's what you need to do. And then what's cool is that when you have a playbook, whether it's this one or some other one, and this one, like you've already seen, is based upon the flight plan. It's kind of centered around the fact that an incumbent has to lose for you to win. I mean, that's kind of core philosophy. Boom, that works. Well, when you have that, now how do you convert the skills and behavior? You need to run a sales meeting that then syncs up with what you want to have happen in your sales process. Here's the problem, and I don't know what you've done, but having the opportunity to sit through a lot of sales meetings and having been invited to kind of audit a few. In fact, true story, a lady from Chicago calls me up and says, Randy, I read one of your articles and I'd like for you to come to Chicago and audit one of our sales meetings. I go, you want me to do what? Yes, I'd like for you to come up and audit one of our sales meetings. Well, nobody's ever asked me to do that before. Why would you want me to do that? Well, you come, you'll see. And so I went and I saw. And this is like a 3rd generation, blue blood, genetically defected, kind of what I'm talking about, agency. And it was sales meeting morning. It was on Monday morning. And they had about 10 or 12 producers at this firm, but they had 30 seats all set up. That right there is a bad sign starting off. They had a table spread with bagels and fresh orange juice and even maybe some scrambled eggs. I don't remember. And then the underwriter came in and had a little box of Krispy Kreme, kind of help everybody with their health. But anyway, great spread, hot coffee, all that sort of stuff. And then the meeting kicked off. And it kicked off where a sales manager got up and kind of introduced the CFO. CFO got up and went through the numbers, talked to everybody's numbers, what they were and how they were doing. After that, they let the underwriter come up and kind of give that whole speech about, man, we really want to partner with you guys. You mean a lot to us. Your agency is everything. And I mean, you guys are awesome. You got a great reputation. We've got this new program, and here's some brochures, and I've got some more out there if you want it. And I'll be out here after the meeting, and gosh, we just really want to partner with you, and you mean so much to us. And then that underwriter spent there 5 or 7 minutes, and then they kind of ushered out the door. And the guy sitting next to me kind of goes, whoop, in the ribs. I go, dude, what'd you do that for? He goes, see what I told you? What a waste of time. Why don't we let that underwriter in here? I mean, that underwriter is going to go to our #1 competitor tomorrow and say the same story. It was like, get them out of here. They bring no value. And then the sales manager gets back up there and starts going around, hey, does anybody have any success stories you want to tell about? And of course, everybody just kind of ducks their head and tries not to do eye contact. But you know that one guy, whoop. Yeah, Sammy, what do you got? And then Sammy said, hey, yeah, I don't want to make a big deal about it and everything, but and then he takes a 30-second story and turns it about 3 or 4 or 5 minutes all about himself. I mean, you've sat through that stuff, haven't you? And you're thinking, boy, if I had a shotgun right now, take that dude out. And then after that guy, then the success stories, that was the one. And then they go around saying, anybody have anything new in the pipeline? Once again, everybody kind of ducks their head. But this one dude raises his hand, and you know who I'm talking about. Yeah, Jerry, what's up? He goes, well, I'm working on the equivalent of GE, General Motors, and Microsoft. And everybody's saying, like, you lying sack of poo, there's no way you are. And man, if we had a shotgun, we'd take you out too. I mean, like, that guy hadn't sold anything in years, and he keeps bringing up the same old crap over and over and over and over. And you're thinking, like, just shut up. So you've seen those sales meetings happen. And then sometimes, then the agency owner gets out a spreadsheet after he's done that and starts going through and says, okay, Sam, you got this going on. Tell me what's going on with Exalophagus Greek Restaurant. How's that going? Oh, real good, sir. Well, what do you think your chances are? Oh, about 50-50. Well, do you have your markets lined up? Oh, yes, sir, it's good. Do you need any help? No, sir, I think I got it done. All right, next, and go through it. And so then it becomes kind of a combination of a town hall meeting and then a spreadsheet Liars Club meeting, and almost nothing happens to help a producer go sell a new account, which is what a sales meeting should be about. If you want to have a marketing meeting, call it a marketing meeting. You want to have a communications meeting, call it a communications meeting. But a sales meeting should really do one thing: help a producer either go bust an incumbent relationship or leverage an existing relationship to get positioned in and get a brand new prospect, a target prospect. That's it. Anything else is a waste of time. So if you agree with that, then what that suggests is that this, if that's your playbook, then your sales meeting should drive exactly what you want to have happen. It shouldn't be driving something else and be kind of a BS session. So that's how you convert all that training into action. And then what's the next step? Next step is really accountability. That if you really want to grow your firm, you got to raise accountability. And the problem is most people are scared to do that. And it's justifiable to be scared. You know, they've never had accountability in the past. You know, Charlie over here has got a big book of business, kind of a prima donna. He didn't want to deal with anything except his own rules. And you know, you're sitting there afraid, like, man, what happens if we raise the standards? Is everybody going to leave? And then all of a sudden, instead of growing this agency, it just dies up on the vine. Well, let's just suggest that it's probably not going to dry up and go away. In fact, there's a lot of people that are sitting there going, looking at you right now going, why aren't you raising your standards already? Why are you letting all these people get away with this stuff? And you know as well as I do that you wouldn't let your CFO, your COO, the president, they don't get away with that trash. And you wouldn't let your CSR and all those people kind of come and go when they want to, and input an account if they decided they wanted to, and be professional if they decided they wanted to, and work hard if they decided they wanted to. I mean, if you had a CSR like that, you'd fire them. And yet with producers, it's kind of like, well, since you kind of wrote the account, I guess you can do whatever you want to do. And it's crazy. It's not true in any other sales team on the planet. It's only true pretty much in an insurance agency environment. And it's really true in the ones that are kind of flatlining, not growing. So you need accountability. So I'm going to give you 3 C's of accountability. Here they come. C number 1, if you really want to grow your agency, number 1 is you've got to have some sort of written contract with your producers that really delineates what you expect. Now, that's different than an employment contract, which says that, you know, here's a certain rules and regulations, here's how you're going to generally get paid and all that stuff. I mean, you know, the non-compete contract. I mean, but this is a written contract that really breaks down, you know, things on, you know, activity, new business accounts you're going to work, how they need to be qualified before you're going to spend your money working on them, how much new they need to write in order to remain at a producer level. And if they don't, then they're subject to becoming an account manager in the future, where it goes from renewal rate, maybe it drops 2 points every year if they don't hit a certain level. Now, I'm not going to tell you what that should be. I'm just going to tell you there's been a lot of agencies that have done that and done it successfully when they've got a plan in place. I also know agencies that have tried it and were very unsuccessful because they didn't have the basis for a sales culture to help a producer grow through it. And so it created a lot of resentment. Nevertheless, if you're going to have accountability, number 1, you've got to have some sort of written contract, written agreement. If not, how are you going to have accountability? What are you being accountable to other than an ideaism? What's number 2? Then you've got to be able to count. You know, it's interesting that when we look at your agency management system, first of all, it's a accounting system that it helps you with your accounts receivable, accounts payable. It's a system to keep track of all your clients' policies. It's a system to keep track of certificates. I mean, it's a systematic way of doing things. So now you can create accountability around a lot of great things. And what's interesting about that really manages all your current and past money. What's interesting is if you want to have accountability in a sales environment, you need to find a way to really create accountability around your future money as well. In other words, think about this. All of everybody else's clients are your future prospects and your future clients. And if you're not building that database and driving that process, and then having people make the calls, follow through, set up, do appointments, do the right kind of activity, what's going to be the future of your agency other than rolling dice and being lucky. So second part of it is you've got to have a system in place with your producers to be able to account for what's going on. Of course, you can get last year's numbers out of your agency management system, but you can't get into more fine-tuned things with how many accounts, how many prospects they have, how many of them have the revenue, the incumbent, the renewal date, and what's their activity and how many calls they make, all that sort of stuff. So you got to be able to count if you're going to have accountability. And then what's number 3? If there are no consequences, there is no accountability. I mean, think about this. When you took driver's ed, they taught you several things. They taught you how to drive a car, but they also taught you about the law. They told you that when you sign that little deal to get your license, that you understand that there are speed limits, that there are certain laws, rules, and regulations. That's the contract part. And they said you're responsible for staying within that written contract and that law. And you go, okay, and you signed off on it. But the second piece of it is this. How do they count? Well, they've got radars, and that's how they count. And and then like if you're speeding, if you're driving above the speed limit, they're going to say, uh-oh, speed limit, boom, catch you. And then they're going to come over and they write you a ticket. But writing a ticket is not a consequence unless you have to pay it. It's only an annoyance. But because you have to pay the ticket or hire a lawyer or take a bunch of driver's ed, now it's enough consequence for most people not to consistently drive way beyond the speed limit with the fear of getting caught. So now you take that same deal here and you go, what does that mean in an insurance agency? You got to have some sort of law, some sort of agreement, some sort of ruling document. In fact, I hear it all the time. What makes America so great is really, and yes, this is a joke too, but it's also the truth. What makes it is that we have law, and law gets reinforced as a general rule. So what makes your agency great is that you have law, you have rules. It's the way that it's going to be run. It's defined. It's in writing. People know it. Number 2, you've got the ability to count. You can see what's going on. Then number 3, there are consequences for poor performance. There's also consequences for great performance. Great performance people, they get to become future owners. They get to buy stock. They get maybe higher commissions or bonuses or special parking places, or we hire them a telemarketer to go set more appointments for them because of what they've done. Consequences go both ways. So we start off with, are the 3 big challenges? Chances are yes. Bottom 80% of producers don't produce near what they're capable of producing. And we said that the difference between where your agency is today and where it could be 5 years from now is direct proportion to your ability to develop your producers, to develop your sales team. Most agencies don't really have a producer problem. What most agencies really have is a leadership problem. That if leaders led, producers would follow. Now there'd be some that you would throw them off the bus. It gets back to the whole good to great. Get the right people on the bus, throw people off, the right people in the right seats. Producers produce. Help them produce. So now you take the middle 60%, help them produce. Do the goal setting, do the training, run better sales meetings, create a culture of accountability, all that sort of stuff. And then problem number 2 was new producers. Can you imagine bringing a new producer into a bad environment? What's their chance of being successful? It's weak. And the stats put out by Reagan Consulting was that 52% of new hires made it, 48% didn't. But here's where the story gets ugly. Of the top 25% of producers, agencies, they have about an 80% success ratio. The bottom 25% of producers, agencies, only have about a 22% success ratio. These worst have to hire 5 to get 1 that sticks. Big, huge problem. It's a hiring problem. It's an onboarding problem. And all these things integrate. And then the third problem we said was your systems. When you don't have systems to train, to coach, to run sales meetings, to do prospect management, to get red hot introductions, to capture information on the incumbent, to teach people how to get red hot introductions, to teach new producers how to get cold calls, all this sort of stuff. When you don't have those systems in place, then what you do is you go, this is probably what happened to you. Here's the yellow pages. That's what they gave me when I was a new producer. What's good enough for me is good enough for you. Well, maybe what's good enough for me is good enough for you. But does that still mean that it's what you're giving those people is what's best for you as the agency owner? Because when you don't really maintain this $50,000 or $100,000 investment and give it what it needs, it's almost like buying a brand new Range Rover with no tires. It would be insane. And so when you get this new producer, but you don't put wheels and tires on it that will get it down the highway, it's a form of insanity. You won't get the results you want. So, done my best to lay out for you a systematic approach. If you have any desire at all to figure out how to get something like this implemented in your agency, then what you'll see is a place to go do a growth capability review. And in that growth capability review, it gets you start to think through what's going on in your firm. It kind of break it down to your view, your reality, and then your view is like what's going on. Your reality is really look at the numbers. We move from opinion to fact. And then the next piece of it is to really start to engage in what an ROI would look like. And then the next piece is are you capable of actually implementing? I mean, unfortunately, probably only about 3 out of 10 agency owners are capable, well, maybe more are capable, but part of capability is having the heart, the desire, the mojo, for lack of a better term, to want to go do it rather than, I don't know, and all these excuses and reasons. So if you're one of those 3 out of 7 that wants to figure out how to take your agency a whole new level, go down below, opt in, growth capability review, and we'll be here to serve you. It's been great being with you. My name is Randy Schwantz. I'm the CEO of the Wedge Group. I've been doing this for 22 years now. I've written 7 books on selling commercial insurance and growing agencies. Man, it would just be great to be able to help you in any way that you want. Thank you very much.